Let's start the meeting. Alors, pour aujourd'hui, we'll do deux choses. Premièrement, finalize or get majority of the data for the financial model. Secondly, we want to do the user personas. Let's start with the easy thing first, which is the financial modeling. So for the financial modeling, Rosette, I need you to help me with three things urgently. The first thing is the manpower budget. Yeah, what I asked in the group regarding your basically which people are you hiring, because you're doing a 3-year financial model, right? So we want to see. Let me just share my screen. Sharing my screen here. Okay, so I hope you can see my screen. Basically, we have already done. We'll come back to this section. What I need is this section. We want a manpower budget. Just a second. Somebody wants to join. Okay. Okay. So we want to understand the manpower budget. So here we have October, November, December 2025, the estimates. We continue like that till 2028 in September 2028. Now, for now, you're just, let's say the three of you, you told me you have one person also. So you'll just come and we'll fill this, yeah? And then in November, let's say we don't have a photographer this month, we don't have an admin, we don't have a stylist. So I know the total salary for this October 2025 should be this. I know you're not getting paid for now, but we want to make it as realistic as possible. Yeah. Then you can say, okay, in January 2026, that's when we'll get a photographer who will earn 100. And then the stylist will come maybe in May, and now she'll be earning 50. And then from there onwards, she'll be earning 50, 50, 50, 50. So that will help us now get the totals for basically. Yeah. So please, um, let me know about this one, because it's a 3-year planning. Let's try and figure out who will we need in the next 3 years, and when do we start paying them, so that we can know in this month this is the much now we'll get out, or this is the much we'll get for this particular month. That's the first thing. The manpower budget. The second thing is the PP and E schedule. Basically, your property, plant, and equipment. So you'll say what you have currently. So you have one laptop, you have I don't know what, which belongs to Avra. So we'll put here the value of those PP and E, the property, plant, and equipment. Yeah. Don't forget, in the PP and E we have the equipment, we have furniture and fittings. All those are PP and E. And then we have also the capex, capital expenditures. So let's say you want in January to buy 3 new laptops. So it will be like 3 times, I don't know, mil days now. You want high-end laptops and stuff. So we want also that to know based on the months, when are you buying what, so that now we can calculate your depreciation expenses, meaning how much you take away from your net income. This will be very vital when we are calculating this one. Yeah. Then there are other things we have not put here that I want to review now so that we can move forward. First of all, in your cost of goods sold, you have the purchasing price, you have your packaging, and you have your branding. And for the case of things that are coming in, you have your shipping costs. Now, I want us to be sure we have captured everything to calculate our COGS. If we haven't captured everything, you will have some costs that are not accounted for, and then it will make the model not reliable because your COGS will always be lower, but reality shows your COGS are higher. So your planning will not be okay. And I remember I asked you, why do we need to create this financial model? And you said for planning purposes. So if we're planning, we need to be very, very accurate with it. So aside from the things that are written here, is there any other thing that affects every time that you sell a product? Are we sure these are just the things that affect our cost of goods sold, or are there other things?
I don't know if it is on the call, but
Let me see.
basically that's the cost that we have incurred so far
Okay.
per product. Because when you're talking about the locally sourced products,
Mm,
we only have we only have we have the material and the that is sewing it plus to the ones to collection, the ones to deposit it and ones to be it.
sorry?
So maybe we
Hello?
can go with that. I was saying maybe we can first go with this.
Okay. Okay. So, um,
And then after, I think if we can keep the model quite agile, so
mm,
every time we have some anything that changes, we can easily update. But I think we
mm,
can start modeling it like this, and then we
okay.
will, as we see more costs, we can actually incur it, and we can also put a certain margin of error in
Mm,
so that it reflects. It keeps like it's we have provision for anything you might have missed. It's quite a simple business,
mm,
but since we're at the beginning, currently we're not incurring many costs. But I believe that
mm,
as we get to year to 6 months in and we start hiring people, and
mm,
I think the costs would mostly come in the Avra um Avra marketplace.
mm,
The marketplace, that's where we have more marketing, we have salespeople, because we're going to have people that are going door to door of shops to tell them,
yeah.
would you enroll on our platform? This is what you're going to get, and all that.
Mm,
So I
mm,
guess that's where we have a bit more cost. But
yes.
for this one, we'll try to keep it very minimal, very simple,
Mm,
so that we have more margin.
yeah.
And also, if and when we get the shop, maybe the rent might increase. We might need one or two sales
Exactly.
ladies. But for
Exactly.
now, we're trying to keep it very minimal.
Okay. So, um, now we agree these are our cogs. I'll just leave it there. Come back here. Now, based on our cogs, here I just wrote random numbers, yeah, just to make sure the model is working. So what we're selling is 6 of this in this month and whatever. So based on this, I just wanted to see if the model works or not. But we are already in November. Do you have actual data for October?
Yes, all the data. Clément, c'est vous avec toi?
Oui, chante, j'allais répondre même.
Okay. Because if we know the actuals here, they will guide us with estimating the rest. Of course, we must have at least 3 months to kind of accurately forecast the next periods, but it will be good to just put the actuals in this month and change this to an actual rather than an estimate, and then we can work from there. Another thing, you see the financial model here is working on these revenues. Let me just alt and alt. This data is coming in from the cells of all this times all this, and it's matching basically this times this plus this times this plus this, and it's giving us this figure here. So the only revenue I'm currently working with is just from this table, your selling price times the quantity you're estimating you'll sell, and that is what is giving me this figure. We have not yet included the marketplace data, and I will need us to review how are we getting our revenue from the marketplace. Yeah, maybe it's not in October or November or December, but when we start, I want to understand how do we estimate our revenue from that side of the business so that we can include into our revenue here. Yeah. Aside from that, from this model, there are some assumptions I
I
made.
would, hello, Sule?
Yes.
Can you hear me?
Yes, I can hear you.
Hello?
Yes, yes.
Yes. I would like to suggest that we have a business model for Avra, the clothing line, and then a business model for Avra Marketplace. Then we have a consolidated one with just high level financial statements, just consolidating financial statements, not the details of the business model.
Okay. So based on
Yeah, because there's two different uh, models. So I think if we mix them, it might actually show the wrong indicators, because the marketplace, for instance, will have different pricing structure, cost structure, and even the business itself, the way the way the business is structured will be different. And the marketplace, for instance, does not need to pay rent, or if it pays rent, it will be a portion. It will only be a portion of the Avra. So the Avra rent will decrease because it will be located in the same place. But it has other costs such as the maintenance of the site. It will have other costs that are not really linked to the brand. So if we mix both, it might not reflect the real performance of both businesses. They are two separate businesses. We could have different business financial models, and then we keep it as a mother company, as a holding company, where we have just consolidating the financial statements.
okay. But okay, I understand. But that will require us to create another, yeah. But it's okay since we were supposed to create it, it's fine. But now if we include, let's say this is three statement financial model, Avra, fashion house, sorry, and then we'll include here for the whatever, and then we can do the consolidated somewhere here, yeah. And then you can now see these, you can play with these, and then they will affect the consolidated. That's okay. But when do you need that one to be done? Because it might affect our timelines now.
No, that one is not urgent for now. We are planning to launch it in January.
Okay. Okay. But just know.
We are planning to launch, but for the business model, I will have the key we keep on to always already generated the cost structure ready and all that so that I'll also get it for your review.
Okay.
Then you can just follow it.
We'll talk about it later. Like to understand exactly what we can do. No worries. So now, as we continue with this one, there are some things I made assumption of. There is the internet cost per month, 100. This one it told me. Communication, I just put 100. I assumed like $30 per person or something, just so that we have communication. And then the corporate tax rate is, I know you don't pay taxes for now, but are you a corporation comme I don't know, in DRC, what do they say? SARL, Société Anonyme. Or are you considered
Yes,
as a
so
small
we
and
are a
medium size?
company.
You're a
Well,
company.
it all depends because we are a company, but the way the tax system in the DRC is that
Mm,
we pay the same. We will pay the same because we will reach a certain threshold
mm,
in terms of turnover, which
yes,
is I believe
yes, the turnover.
80 million Congolese francs. Yes, turnover. So we will just let's make an assumption that we will reach that by next year. So we will be paying 30% income tax. Um,
Okay,
hopefully, we find ways to.
okay. So this you might start paying once you reach a certain limit. Is it possible that we get the exact limit so that when we are modeling, we know, okay, we have hit that limit in this February 2026. So starting March, we should start taking into account the taxes. Yeah.
It's
So
80 million Congolese francs.
80
80
million.
million Congolese francs divided by 2,225 francs per dollar.
Okay. Okay. That's good. And then before that, how much are you paying per year? Or is it that 1% turnover?
Of profit before tax. If you're making losses, it's 1% of the turnover.
Okay. And if you're making
And in
profits,
the selling price, we include 16%
VAT.
VAT. Yes,
Sorry?
VAT. 16% VAT.
You see now that's a COGS. It has to be added here. Because if you don't add it here, it will mess you up.
No, we shouldn't. So the price, in the business model, it should be a tax exempt divided by 1.16 also.
No, you have to account for that 16% because let's assume, yeah. Let me come back here. Let's assume this one. You're selling it at 30, your COGS at 29. You only have $1 left. On top of that, the government will come and reclaim 16% of this 30. Where do you get that amount from?
No,
Yeah.
what I'm saying is in the income statement, it
Mm,
will not be shown, but it will show in balance sheets because we are collecting for the government. So let's say if we are selling at one. How do I make it easy for myself?
mhm,
If you're selling at 11.6,
mm.
our turnover will be 10, and then 1.1 goes to the balance sheets for government, and then when we pay the next month, we take it from there, and we debit that account and we credit cash.
Okay, I haven't understood correctly. Let's start from ground zero.
So what I'm saying is when we are modeling,
Yes.
we don't put that 16%,
Mm,
but when we are collecting the cash,
mm,
the 16% our will not go into our income statement. It will go when we collect it,
Yes.
it will go on the balance sheet.
As deferred income tax.
Yeah. So, no, income tax, yes, but not VAT. Income tax, it will go on the income statement because it comes right after the profit before tax.
Mm-hmm.
So basically, what I'm saying is we shouldn't account for VAT for now because we're trying to look at the business. VAT we are collecting for the government. So it will come when we make a sale. So the price that we're going to show will be even in the platform that we are using, it actually accounts for the sale tax inclusive, but separating the tax and the revenue. So for now, we account for the revenue because we're trying to see is the business model viable. Now, when we're going to look at when we're going to look at the balance sheet now, we can include the tax. Or what we can do is is just add the line for tax. So we have the price before tax and the price after the tax. But when we are computing, making our calculation, we are taking the price before taxation.
Okay.
Because if we say that we are selling at $25, yet 16% of that is tax that we are supposed to take back, then we are making the wrong calculations. We are assuming that we are selling at 16% more the price that we are actually selling.
Wait, let me understand correctly. This Blues Kalemi is $30, right?
Yes.
Does this $30 will it pay the 16% inclusive in this $30 or exclusive? It's outside the $30.
Mm, yeah, it is included. That's why I'm saying we need to remove it.
Okay.
N'est-ce pas, il vous dit, les $30, ça inclut la TVA. Pardon?
Let me just do the calculation here.
La question.
So,
Je dis les $30. Quand on dit une blouse coûte $30, ça inclut la TVA.
Non, ça inclut pas.
Donc, vous allez vendre à $30 plus 16%.
Oui. À moins qu'on doit revoir ça. Mais c'est comme ça qu'on doit faire.
Est-ce que quelqu'un va acheter un $30, ça fait combien?
the 16% is
Donc, ça sera
4.8.
$35.
Oui.
So what if we did? No, so, excuse me. Then on pourrait être trop cher. We might be very... Quand vous m'avez vendu l'ensemble là à $100, ça veut dire qu'il y a 16% dedans. Parce que vous m'avez pas vendu ça à $116. Moi, je pense que la TVA est incluse. Pardon?
On va inclure ça dans le prix. Donc, ça sera $30 TVA inclus.
Pardon?
Si on doit mettre
Pardon?
cher.
Si on a bastiki, hein?
Si on doit mettre la TVA, donc ça sera plus cher. Et qu'il me dit ça sera $100 avec TVA.
C'est ce que je suis en train de dire. De manière qu'on sait que les $30 incluent la TVA. Donc, on doit enlever la TVA. Ça veut dire qu'une chemise de $30 en réalité coûte $25,8.
Mais
C'est ça
maintenant,
notre argent.
si vous me permettez, you see that is a big problem. Pourquoi? If on a inclus déjà ici the 16%, basically we want to sell at 40, the customer buys at 40, and then we will take the 16% and give to the government later. If that is the case, you have a serious problem because that 16%, the way I understand, and this IFRS, whatever, it's part of your COGS because it's a cost to you for that particular article. And if you don't sell it, it's not applicable to you. You understand? So now, when you come and see things
No,
like
that's what
this,
I'm saying. I'm saying we should remove the 16% so that we see the real price that we're going to put on the products, and then we will add the 16% when we are selling.
but you see things like this, it means this is a loss because here we haven't even accounted for the 16%, and our COG is saying 29.23. You see, so let's try and revisit this. Okay, this pricing, and this is why I wanted us to use that calculator. I don't know where it is, that calculator that will tell us like, okay, this product has a margin of this much, this product has a margin of this much. Then you can start seeing which products we can just take out because some of them won't work. Okay, let me see. Yeah, some of them won't work. I don't think we have enough time for that now, but where is that calculation? First of all, what is your margin? What margin do you want to work with so that we know
Sorry?
what is the margin you want to work with? Basically, for every product that you're selling, how much money in terms of percentage
We
you want
want
to keep as
we want
profit?
50%, at least 50% margin.
Okay. Let me see if here it is. Avra pricing calculator. So if you want at least 50%, um, your prices are too low. Just from just looking at it, your prices need to be like 8 times what you're purchasing, basically. But let me let's remove all this. And then we have, damn it, we have a purchasing price. Let's say it's 25. The shipping cost is 0. Your branding is 0.23. The salary we're not including. Our packaging is 1. So here, let's put the 16% TVA. This should be in percentage and 16%. Okay, so is equals.
No, we can't include TVA in the codes.
Yes, but let me just show you something and then you'll understand why I want it included. Because this is
Okay.
pantalon, sweatshirt, sweetheart, yeah, 35. 35. Okay. Let me delete all these. I can't remember what they are. So we have 35. We are spending 25 to purchase. Shipping cost is 0. Our branding is 0.23. The TVA is 16%. Oh. RHAN. Okay. The TVA is 5. Our packaging is 1. So COGS is that. Let's now write our contribution. Our contribution is actually this one less this. Okay. Equals to this less this. Okay. Now this is how much we are left with. For our contribution margin, this is what basically this product contributes to the fixed cost. Our contribution margin is actually this divided by this. So you have a 9%. And the reason I want you to include this, because this money doesn't belong to you. And if anything that goes out of your pocket, we have to treat it as an expense. Now, the reason I'm putting it as COGS is because it's a variable cost. If you don't sell, you don't incur this 5.6. But once you've sold, you have to incur it. So you cannot plan for this. You You understand? Now, based on the reason I also put it here is because I want now to understand at what price should you be selling so that you can be able to pay your TVA and still maintain that 50% that you want. Now, from there, we can AWG, we can do a goal seek whereby we want this cell to be that 50% that you want, which is 0.5. Sorry. Alt AWG. We want this cell to come to a value of 0.5 by changing what? Your selling price. So that cloth needs to be sold at $77 so that you can purchase it at 35.
But you see, TV VAT has changed.
Yes, because 16% of the sales price. You understand? Because if we do is equals
I think we're saying the same thing.
this times
I think we're
0.16.
saying the same thing. What I'm saying is, no, what I'm saying is in actual what I would prefer we do is that we don't include VAT in our complications.
Yes,
Why
you.
am I saying this?
Mm,
Because VAT comes after everything. We can add it when we want to. Now we are trying to see if the business is viable,
okay.
and we can put it at the end of the line of what we are trying to do. So I see what you're doing, but what you want to look at the price of each item, including VAT in the price. We can do that
Mm,
too. But when we are doing the financial model, I would prefer we have everything excluding VAT, and then we add VAT at the end, or we start with the price as we did with VAT in one column,
mm,
and then we have the price excluding VAT, and then we do all our calculations, but it reflects on the first column with VAT included. I'm saying this because it will make it easier for us to see the margin uh, without VAT. I don't know, maybe it's my accounting background that is playing that is playing on
okay.
me, but
So
we
for
don't put
now,
VAT in the cost because
if
it's yes.
if you give me the go ahead of not working with the VAT, I won't work with the VAT. But now the problem you'll face is if, assuming you're starting operations, then the government decides no, you have to start paying VAT. All your, if I can say, your planning, analysis, and everything will not work because we did not take into account that. But if you give me the go ahead, we'll continue. Let me just try and run this again without that VAT.
We are going to put VAT.
But if you
I think je pense qu'on te comprend pas. Peut-être que je vais parler en français un peu, que tu vas me comprendre mieux. Je dis ceci, hein.
okay.
Je dis ceci. Lorsqu'on est en train de faire notre modélisation financière pour
Mm,
voir si notre business est viable, normalement, on ne doit pas inclure la TVA.
mm,
Et puis, tu vois, quand on dit, par exemple, on achète le pantalon, parce que la TVA, c'est pas seulement lorsqu'on vend, c'est aussi quand on achète. Tu vois. Donc, mon problème ici, ce n'est pas que tu mettes la TVA ou pas. Mon problème, c'est que tu as mis la TVA dans les coûts. Ce qui m'arrangerait, c'est que la ligne TVA descende en dessous de COGS et puis on ajoute, donc on a le COGS. Est-ce que d'ailleurs, nous, on paye la TVA aux gens qui fournissent nos services? Peut-être oui, peut-être non. Mais la partie TVA à la vente, je préférerais que ça vienne juste avant le prix total. Donc, on a d'abord toute notre structure de prix avec
mm,
tous nos coûts. On a le coût total. Ensuite, on ajoute une ligne avec la TVA qui sera 16% du coût total. Non, non, non. On a, non, non, on a le coût total. Ensuite, on a notre prix de vente avant la TVA. On calcule notre marge sur base du prix total avant la TVA.
mm.
Et puis, on ajoute la TVA en bas. On a maintenant notre prix de vente avec la TVA incluse.
Okay.
Vois un peu ce que je veux. Parce que la TVA vient à la fin vraiment, juste avant la vente.
Mm.
Et puis, on peut faire maintenant nos calculs sur base de ça. Moi, mon problème, c'est qu'on met ça dans les coûts. Pourtant, on ne peut pas mettre ça dans les coûts. La TVA vient après, même pas après le coût de revient, mais plutôt après le prix de vente que nous voulons avoir. Donc, quand on veut avoir on a d'autres coûts, we have our cost of goods sold,
Yeah.
we add our margin,
Mm.
our idea margin, we have our cost of sale before VAT, then we add 16% of that,
Mm.
then we have our price VAT inclusive.
Okay. Okay. For now, I'm still confused. I won't lie. I'm still
So
confused,
we are saying the
but we
same
can
thing.
work with that.
It's just a format.
Okay. Okay.
You're saying that you're confused? I'm
A
not
little
clear
bit.
enough.
A little bit confused. I'll still ask questions on WhatsApp. We can continue for now. um. Okay. So let's go back
Okay.
here. Let's go back here. So TVA or made above zero. We are not calculating that. So we are selling this thing at 35. Okay, our cost of goods sold is 26.23, which is 26.23 here, and we're selling it at 35. Basically, if you want a 50% margin, it means that it should contribute also 26.23, making it 50%, 50% for the 100. We have to sell it at 52.46. You are selling it at 35. What do we do in this case?
We'll have to find a way to reduce the cost. We
But
want to
can you?
optimize the cost.
But
Yes, so the
Yes, we
Jose,
can.
I think you're going about it the wrong way. Don't fix a
Sule.
price before at least figuring out your costs. Why? Let's not go with the market prices. Let's not go with what the competitors are doing. Let's not go with what we think the Kinshasa people can do. That is not for us. That is Clemence's job to figure out how can she sell as $75 pants. That's marketing. What we need to do is figure out, are we making money or not? Yeah, because we can sell these things. And this experience I got with the factory we were working with, Serge, we were selling peanut oil, but with every bottle we were selling, we were losing $2. You understand? Because we wanted to be competitive in the market. And that's how we failed. We wanted to follow the pricing structures of other people. Other people are importing things from Malaysia. Other people are importing I don't know what. Other people don't pay taxes. Other people don't. We cannot base ourselves with them. Let's try and be realistic. Yes? How much do we want to make in this business? We can try, maybe we do this exercise. Yeah? We create something like what you're seeing here on the left. Then, based on this, let's try and calculate all these margins first. Yeah, we calculate these margins. Then we'll see which ones actually apply and which ones don't. For example, this Petite Robe Hermie, it's $30 you're selling. So you're selling it at $30. What the hell is this? And then Petit Roberni. Let's go Petit Roberni. So here it's 12. That's the purchasing price. And then your packaging is 0.23. Okay. You see now this one, La Petite Roberni, it's 56% margins. Or let me try and run it again. Okay, see, we want that to be 0.5 by changing what sell, change the selling price. So you see this one, it meets your criteria, meaning that you are actually selling it at $30 currently, and your contribution is
Sule,
2.2.
please,
Yes.
Sule, I would just want to add, the column on top of 20, not the column, the cell on top of 26.
Mm.
That's yes, you just put equals to the 26 times 1.16. That will have all the price with TNT.
Okay. So that means this should be like a selling price to the customer. This is basically your revenue. Okay. Now this
That's
is
30 points. That's $1.
yes. So now petite mean this one. It's 30.00. So this that you're missing here. Okay. Can we just review this and then find out which ones actually come with a 50% margin or more, and which one, let's say you have a minimum of 30%, which ones are below 30%, which ones are between 30 to 50, and which ones are more than 50. Those that are more than 50, we can push for their sales. The ones that are 30 to 50, we optimize. Less than 30, just drop that thing. Seriously, you won't make money. Is that possible? Team, are we here?
Yes.
Okay. So who can do that for us? To go through each product, do a proper calculation. This we can say is we can say that it's the selling price plus VAT. This is the figures we want to see on this side for now. And then we'll know that there's a 16% inside.
Yes.
Sule, sweetheart, I wanted to say something
Yes.
about the sweetheart. I don't know why we shouldn't calculate it. The sweetheart and the sweetheart trouser and the sweetheart pants. Their price was still high because mom had manufactured them, so we bought from her.
Okay.
That's why the prices are high. That's why we are sure that the prices are going to be lower.
That's why I
So,
talked about, yeah, that's why I said we're going to optimize the price.
Yes, but you see now,
but for the rest, it's okay.
okay, because we are
Only there's
working with a
something
planning
that's
team.
there's some
This is for planning purposes, right? You know the prices will go down, but we want to be sure, even at the current state of prices, we never know, dollar itapanda, itashuka, I don't know what. In the current state of prices, are we still making money? That is the main question that we want to find here. This is an internal document. Nobody's sharing it with anybody. It's for us to make now informed decisions. And that's why I want us to try and run this. Because yes, the price will go down, but at this point, things are already manufactured. We want to sell them. At this point, will we still make money or not? That's the $1 million question that I want us to be sure. If we're not making money, then we should know, are we going forward with that or are we scrapping that? You can decide, okay, these are already manufactured. We won't make money, but we can use these assets in such a way that now we gain market, we gain fast customers. But that's okay. But at least in the planning phase, we understood that. I don't want it to be a surprise for you when you're doing, I don't know, end of year sales. You are looking at the figures and then you're like, where did we go wrong? I want us to understand the figures from now. So I don't know who can help me come up with this, and then somewhere add a colon pour dire que this one, that is the margin, this one, that is the margin, this one, that is the margin. And this, once you've had even the margins, it's
I
for
will do
you
it.
internally. It's for you internally now to sit down and decide, yeah, if these things are working or not for you. I'm just looking quickly. Things are looking good down here. Here, okay, this. I will assume this they're not working, this they're not working, this is not working, also this. But we can try, yeah? So you try and do it, and then we'll see. Let's continue on because of the time. So, Zed, if you can, because now when you're talking, I heard that once you have a place, maybe rent might go down or stuff. So now I need the rent also done.
I'm not going to assume anything about rent going down.
Okay. So,
I might assume that the manufacturing costs will go down because I have certainty of that and we know why they are currently high.
okay.
But for the other cost,
Okay. Now, what I'll need you to do is this manpower budget. I want you to budget, even if you want to say it's zero, which is unfair and I can't accept. But anyway, you just put 000, and then when you start paying, I want to see when you start
zero
paying.
for October, November, people are getting paid.
Okay, so you just put. Um, then you go. I try and put it online so that I can share a link. You just fill in this part. Also, the property, plant, and equipment will buy a camera, so that's an capital expenditure. The camera will be, I don't know, $1,000,000, so you just put your 1,000. Then I don't know, in year 6 we'll sell that camera, so it will be, I don't know, with less value, maybe 300, things like that. So I want you to fill in this. Also, I'll include now the one for rent also somewhere here so that we can have these schedules which will link now to all this. The main column I'm working with is this one. So once I have this one, it's easier now to just go and fill the rest of the data. Yeah. Unless here now we say like, okay, this will change, this will change. So we'll pull these different figures. So for the salaries, we'll pull the different figures from the bottom. This is not linked yet. D144. Yeah, should be there. But anyway, we'll pull from that. And then aside from that, I think for the financial model, yeah, we'll continue and we see how it goes. Yeah. Anyway, we're done with this. I'll write to you what needs to be done. On the other hand, let me see. Let's do this a little bit quickly. We can do one together and then we'll do the rest even later. So basically we're coming in to the side of the customer persona. I like saying user persona. I don't know why, but it's the same thing. Basically what we want here is to understand the segments of our market. We have an entire market. We have the whole of Kinshasa. We have the whole world. But we have to niche down and focus so that our communication can target the person that we want. In the sense that we already know Avra has the Avra fashion, that is, yeah. Or we can say Avra in general, it has two main areas. It has the fashion and the marketplace. For the marketplace, the persona is just one, I think. It's just a business owner who sells clothes, who wants distribution channel, who wants visibility, who wants acknowledgement for the work they're doing, and they want that market also. So that person can be male, female, whatever, but it's more or less an entrepreneur who wants to make money by leveraging on the tools that you're already putting in place. That is the online marketplace, the visibility and everything, so that they can make also some money. That is a persona. You understand? The way we'll speak to these people is very different to the way we'll speak to other people. And that is the exercise we want to do today. We want to understand who are we dealing with? What kind of customers are we dealing with? Normally, we should have maybe three, if not two, so that we can focus mainly on these people. But because Avra, we have the Avra, the marketplace, and the fashion house, We can do 3 for the fashion and that 1 for the marketplace. So we'll do 4 user personas. And the purpose of these user personas is to try and critically think how we can get this person to get on board with us. Um, this is an example. I just picked a picture from WhatsApp. We'll give the segment a name. So this is like diaspora, millennials, and professionals. Or we can say like this is, I don't know, the grinding, no, not grinding, sorry, the hustling woman, I don't know, we just give it a name. Yeah. And then we start by coming up with a name for this person. So this person, I don't know, to me looks like, I don't know if it's a Mary, a Sophie, or whatever. So we just give, this is Sophie. Customer persona 1 is Sophie. What is her age? So what is the ideal age for these kind of customers? So let's say it's the traditional, and we're looking for working women and the whatever. They might be between, I don't know, 28 to 38 or 45. We write here. So what age can she be? Plus or minus 5 years. Where does she stay? Okay, we are like, okay, in Kinshasa, she might be staying in this area or in the DRC, middle income areas, blah 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 blah. Where does she work? She works in an office, she works in a mine, she works as a consultant, she works whatever. What's her position there? Her social class, is she low class, middle class, high class, lower high, higher medium, blah 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 blah. What social media does she use? She uses TikTok, she uses YouTube, she uses I don't know what. How much is her disposable income? Let's assume she's making $3,000 per month. Then, if we remove all her expenses, she's left with 300. That is the disposable income. That amount she doesn't touch after everything is sorted out. That is her amount. That will guide us to understand, even based now on the pricing, can we increase our prices or not? Once we understand this persona, how much she has in disposable income. And then, what does she need? The wants and the needs. The needs are absolutely necessary. The wants are things on peut se permettre à avoir. Yeah. So we can start with the needs first, and then maybe some wants. So let's say she wants luxury fashion. That's a want. She wants fast delivery. That's a want. She wants cheap that looks good. That is a need, for example, for her. And then she wants tailor made. That is a want. So we can list what she wants and what she needs. Based on that, we'll come up now with the frustration. She wants the luxury fashion, she wants the cheap that looks good, but she always gets poor quality. She always gets poor customer service. She has to go, I don't know, Zando, I don't know, whatever. So those are the frustrations these personas are facing. So let's say the wife of a minister, she doesn't want to go shopping where there are too many people because she is identifiable. People will start disturbing her. People will take videos of her. Blah 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 blah. So those are her frustrations. We list them here. And then, based on that, based on what she wants, based on her frustration, social media she uses, a more detailed description of her persona or the bio of this person, we can now come here to the strategy section. And then we say, because she's always on Instagram, then we should do an Instagram ad so that we target this persona. Because she wants good quality stuff, let's now find a supplier that will give us good quality stuff, or we make things that are good quality. So this is now the strategy that we'll use to get this persona. We are targeting this person, a fictitious person, but this will represent now that segment of the market. I think we're clear there.
Yes, sir. Clear.
Okay, now Fatma is the best person to lead you through this exercise. I'll just be typing here what you're saying. My mind works logic more than, yes, it's creative, but not this type of creativity. So I'll ask Fatma to lead now this second session, and then we'll try and do one persona, and then I'll share this file with you. You'll fill the rest of the 3 personas, and then we can submit, review, and go on.
Thank you so much. Okay. Someone's in the group saying
Hello,
time is up.
hello.
Class, your time is up.
Yes, they're going to school.
Okay.
Okay,
There
okay.
is they're attending class. They're attending class, but I think we got the gist that maybe we can Fatma, if you can allow us maybe 15 or 20 minutes of your time in the evening
Mm.
or in the
Okay,
afternoon so that we do that exercise, especially with Woody and Clemence. They're going to be the personas as I'm
Mm.
working
okay,
on the financial model. If we can allow them to do that exercise for one persona in the afternoon, especially me, so that they can do the rest.
okay. So can I confirm the time so that I can also from my end see if it's possible?
Yes, please.
At what time?
Et vous dites, Clémence, quelle heure vous convient ce soir?
In the evening.
8.
Okay, so
Oui.
I'm
8
seeing
p.m.
here
Kinshasa or
4:30.
7.
So 4:30, I've seen here you've indicated 4:30, and that 4:30 Kinshasa time.
Yes.
4:30, okay, 4:30 Kinshasa time makes it 6:30 my time,
Yes.
Kenyan time,
Yes.
right? Okay, so what we do, if possible, let's make
Does
it
that work
seven.
for you?
Let's make it seven, because at that time I know I will not be available. From 7, it is okay. Please let me
7
know
your
if
time.
7
7 Nairobi.
7 my time,
Okay,
yeah.
so
So
that's
that makes
5.
it 5.
5 Kinshasa. Okay.
5.
Okay.
Yeah. Does that work?
Yes, of course.
Okay, cool. Okay, then, God willing. Thank you
Okay.
so much.
Thank you.
Thank you so much.
Thank you. Thank
Okay. We'll
you.
see you in
Bye
some few
bye.
hours.
Have a
All
nice
right.
day.
Same to
You
you.
too. You too. Bye. Bye.